Asian stocks stumbled today after China delivered the smaller quote to lending rates than markets had counted on. Continued Beijing's run for disappointingly frugal stimulus steps. Disappointed by the move of China's central bank, Chinese blue chips eased 0.4% to the lowest in almost 9 months. Now, MSCI's broadest index of Asian Pacific shares outside of Japan slipped 0.4% to a fresh low for the year, added to a 3.9% dive last week. Japan's Nikkei was up 0.4%, though that followed a 3.2% drop last week. Eurostock 50 features and FTSE features both edged up 0.1%, while S&P 500 and Nasdaq features were near flat. New data from Thailand shows that the economy grew at a much slower than expected pace in the second quarter as weak exports and slower investments undercut strength in tourism and prompted the government to downgrade its 2023 growth forecast. The Southeast Asia's second largest economy has been hobbled by slackened global growth, led by its main trading partner China, and failing investors' confidence due to protracted period without government following elections in May. The National Economic and Social Development Council says Thailand gross domestic product grew 1.8% in April to June, period for a year earlier, well below 3.1% expansion expected by economists. Thai GDP had risen 2.6% year-on-year in the first quarter, revised down from 2.7% stated earlier. The second quarter was hurt by export volumes, falling 5.7% year-on-year, and dragging manufacturing output down by 3.3%, while government spending also declined 4.3%. China's central bank has cut key interest rates amid concerns about the post-pandemic recovery and of the world's second-largest economy and weakened currency. The People's Bank of China today cut one-year loan prime rate, a benchmark for corporate loans, from 3.55% to 3.45%. The central bank held the 5-year LPR, which is used to price mortgages, steady at 4.2%. China's post-COVID recovery had been hampered by weakening demand for Chinese goods due to uncertain global economic outlook and domestic challenges ranging from slumping property market to a record low birth rate. Today's rate cut was greeted by disappointment by some market analysts who have been holding out hope for bold measures to boost the economy. Social media giant Meta has announced plans to roll out the web version of its microblogging apps, Threads, next week. According to a report by Wall Street Journal, Meta's plan is not yet finalized and it could be changed as countdown to the launch is being waited. The report noted that users can see the Threads post on the web, but access to it is limited as the Threads app is built keeping mobile users in mind. Last week, Threads and Instagram CEO Adam Mosseri confirmed the web version of Threads is being tested internally. Threads witnessed a wild turnout from users during the first days of its launch, as the number of its users exceeded 100 million in less than a week, before the numbers of active users declined and interaction decreased sharply later.